Thanks for staying with us. The Affordable Care Act is intended to lower health care costs across the board, but opponents claim it's causing uncertainty and preventing hiring among business owners. One Las Vegas insurance agent says the act fails to address the high cost of health care. Larry Harrison is with the National Association of Health Underwriters. He joins us along with Ron Nelson. He's a member of the small business majority and the owner of a Las Vegas company. Thanks to both of you for being here.
Thanks for having us, Nina.
So tell me, what are your employees how are they going to benefit from this act? Will it change their health care at all?
Absolutely. It's going to keep in place their access to health insurance because I've already received tax credits from the ACA for 2009 and 2010 and 2011, which helps me continue to offer that to my employees. In 2014, there's going to be no more pre-existing conditions. There's going to be no way their children can be kicked off the plan. Their wives, as well as my wife, no longer have the pre-existing condition of being a woman. So
that's a horrible pre-existing condition.
It is. It's
I can
hard.
tell you.
It's a hard one to get rid of.
Yeah. So, did this cost you any more, or is it? I know you said the tax credits you're getting, but
I've literally this is the first year in a long time where my policy costs the same. So I found a policy, and the costs did not go up. With the tax credits, my overall costs of running my business have gone down because I've gotten a tax credit back of about $3,200 in 11 and about $2,700 in 2010.
And how many employees do you have?
I have 5.
Okay. Is he typical of a very small businessman? Will they make out well from this?
No, he's not typical at all, but it's nice to hear that he's been able to find his way through the maze. I have a question. Did you have a broker help you with this?
No, my accountant actually, as far as getting the tax credits. I just mentioned it to him, and the policy didn't change at all. I mean, it's the same policy that we had before, the same type of plan. The tax credits are just there from the ACA.
Okay, let's take a look. The Affordable Care Act, as I said, is intended to lower costs. All grandfathered health plans, you heard the president say before that if you like your insurance, nothing will change. And that's true for grandfathered health plans. Those are the ones that were in effect when the Affordable Care Act became law on March 23rd. They are prohibited from applying lifetime dollar limits to key health benefits. They are not permitted to cancel your insurance coverage solely because of an honest mistake that you or your employer made on your insurance application. And they must extend dependent coverage to your adult children until they turn 26 years old, with one temporary exception, and that is if there is, after 2014, if your adult child has coverage available through another plan. Those are the major changes that affect the majority of Americans, because I think the majority of Americans are covered under some group policy, correct?
Right, and all of that really sounds good, but unfortunately, many of the insurance companies did not extend grandfathered plans because they didn't want to keep 2 sets of books. So it sounds good, but it doesn't work in the field of engagement. There's only very few insurance companies. I can think of only one that offers grandfathered plans.
So you're saying the rest of us who are covered by group plans are going to have changes in our coverage?
Depends on the size of the group. See, if you're on a self-funded plan where you have, say, more than 100 employees, they are exempt of all of this.
A self-funded plan?
A self-funded plan would be through a union, a large employer, city, state, school district, fire department, police department. Those are all self-funded.
They're exempt from those provisions as well, the ones I just said?
They're exempt from the grandfathering. They have... in a simple word, yes. And so what we're going to find is self-funding has been typically for 200 employees or more. Now we're finding carriers are looking at 150, maybe even fewer than 50 employees, so they can go with self-funded plans because they will be able to work around some of the cost-prohibitive non-funded mandates that are in the Patient Protection Affordable Care Act.
Okay, we're going to take a break. When we come back, more on the Affordable Care Act and what it means to your business. Don't go away. Thanks for staying with us. We're talking about the Affordable Care Act and how it might affect your company. All right, I want to read this. These are the ways that if you don't want to lose your company's grandfathered status, which you say most companies have already lost, here's what you can do. You cannot significantly cut or reduce benefits. You cannot raise co-insurance charges. You cannot significantly raise co-payment charges. Grandfather plans will be able to increase co-pays by no more than the greater of $5 adjusted annually for medical inflation, or a percentage equal to medical inflation plus 15 percentage points from those in effect March 23rd, 2010. That's when the act was signed into law. For example, if a plan raises its copayment from $30 to $50 over the next 2 years, it will lose its grandfathered status. And you cannot significantly raise deductibles. A family with a $1,000 annual deductible with a hike of $200 from 2010 to 2011 could see their deductible increased by another $50 the following year. You cannot significantly lower employer contributions, and you cannot add or tighten an annual limit on what the insurer pays. An employer with a group health plan can switch plan administrators as well as buy insurance from a different insurance company without losing grandfathered status, provided the plan remains essentially the same. Is that correct?
Correct.
Oh, so those all sound like pretty good things, but you're saying they're not available now?
Well, we have one company that offers a point of service. It's an HMO, a PPO, and an indemnity plan. But there's no other company that does. So if you want to leave that carrier and go to another carrier, it's not available.
What about your company? How were you able to do it?
Well, I did it through my broker. I shop for my insurance the way I always do it. I've always supplied health insurance to my employees. I mean, for decades, because it's the right thing to do. I think...
Did you have to raise the amount that they contributed or anything like that?
Well, I paid 100% for decades.
Oh,
but
you did?
when the cost started to skyrocket, we had a meeting, we talked about it, and they, on their own, said they'd pay for half. So now I only pay for half. Whereas I paid 100% before. But I'm looking forward to 2014 when the good stuff really kicks in, including our own Silver State Insurance Exchange, where I'll be able to go. That will be another avenue I have right now. Maybe I have 2 or maybe 3 different people I can look at. When the Silver State Insurance Exchange opens up, I'm going to have a lot to choose from at that time, and I'll be able to buy just like General Motors, because I'll be in a pool of 10,000 people instead of a pool of 5.
Mr. Harrison looks like he wants to burst your bubble. Go ahead, Mr. Harrison.
The Silver State Exchange is being put together. We call them the gold medal plan designs. We have a gold, a silver, a bronze, there's a platinum. And if an employer or a person is looking for a subsidy, they can only buy the silver. Even if they want to buy the bronze or something, they can't. They're going to be married into...
If they want a tax subsidy.
If they want a subsidy.
But if the costs are lower, I'll no longer need that tax subsidy.
Okay, but choices is what we're losing. We're going to have...
I've been losing choices for decades. Every year the insurance company comes in and says, here's your 22% increase, here's your 28% increase. But if you cut this, 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 and this, we can cut the increase down to 20%. So I've been losing choices every year for the last 10 years. That'll be nothing new to me.
Well, it's not really so much losing choices, because quite honestly, the benefits have expanded because of this bill. I'm not saying the bill is a bad idea. I'm just saying that 2,700 pages is designed to confuse. As you're reading this, I think we lost a lot of people in the audience because it just doesn't make sense to a lot of people.
Well, thanks. I appreciate that.
It's just
that it's... Hey, I got to tell you something. I'm not that smart, and I read this today, and I mean, I didn't read the entire 2,700 pages, but I read the government's page, you know, on the facts on the fact sheet on whitehouse.gov or whatever, and it was not that difficult to understand.
Good.
What makes sense to me is in 2014 there'll be one set of rates, and the only thing that will change is for your age or if you smoke. So they can't go back and look through my file and see what medical things that I've had done and change my rates. So that makes sense to me, having the same rate for everybody. So that's what makes sense to me.
Well, actually, that's available now. But, you know, the consumer's best defense is a well-informed broker. And the more a person knows about their options, the more they're going to like their plan designs, and the more the employees are going to like the plan as well. Because it's an educational process to be able to understand what the copay is, the coinsurance, deductible, when does the copay start and stop. All of this is imperative that you have somebody that really understands. So my recommendation is to ask if your broker is a member of the National Association of Health Underwriters.
That's the last word. Gentlemen, we're out of time. When we come back, more on the options available to people who need tax subsidies. Don't go away.